Yo, welcome back to Money Talks TV. This is the Daily 8, where we follow the bag, not just the game. Yesterday, markets took a hit, chip stocks got crushed, and OpenAI just might become your new social feed. The markets are like a roller coaster, and today we're strapped in for a wild ride. Tech stocks are tumbling, trade wars are heating up, and AI is changing the game right before our eyes. So grab your coffee, buckle up, and let's dive into the Daily 8. Alright, let's rip off the band-aid and get right into it. Yesterday was a bloodbath on Wall Street, with all three major indices closing in the red. We're talking about the Dow, the S&P 500, the Nasdaq, all down. Micron, a major player in the chip game, took a 4% hit. Meta, Facebook's parent company, down another 1%. The entire semiconductor sector is getting absolutely hammered. Remember that whole chip war brewing between the US and China? Yeah, things just got real. The US government just dropped the hammer and banned Nvidia from exporting its top-tier H100 chips to China. That's a massive blow. We're talking a potential $5.5 billion charge off the books for Nvidia. And as if that wasn't enough, AMD, another big name in the chip game, got caught in the crossfire. Both stocks plummeted over 6%. This isn't just some tech squabble. This is a full-blown economic showdown. Think China's just going to take this lying down? Think again. Chinese tech giants like Alibaba, Tencent, and ByteDance, all major Nvidia customers, are feeling the heat. They're already pivoting, shifting their focus to homegrown alternatives like Huawei, a company that's been navigating US sanctions for years. Alibaba and Tencent saw their stock prices dip around 2%, a blip compared to the carnage in the US chip sector. China is ready to play the long game, investing heavily in their own tech infrastructure. Speaking of shaking things up, OpenAI, the masterminds behind ChatGPT, are at it again. Rumor has it they're cooking up a brand new social media platform. We're talking about a platform powered by artificial intelligence where ChatGPT could be your new best friend, your news source, and maybe even your therapist. Is this a direct shot at Meta and X, formerly known as Twitter? You bet it is. OpenAI also just inked a deal with H&R Block to develop an AI-powered tax tool. Artificial intelligence is no longer some futuristic fantasy. It's here, it's real, and it's coming for every aspect of our lives. Let's shift gears from the tech world to the world of activist investors. Elliott Management, known for their aggressive tactics and high-profile shakeups, just dropped a cool $1.5 billion into Hewlett-Packard Enterprise. That's right, the legacy tech giant that's been struggling to find its footing in the cloud computing era. Elliott Management smells blood in the water, and they're betting they can turn things around. Expect some serious pressure on HPE's management to boost performance, cut costs, and maybe even break up the company. Speaking of pressure, Google's feeling the heat from regulators around the world. They're currently staring down a massive $6.6 billion lawsuit in the UK over claims of ad dominance. Japan just dealt Google a blow by banning them from being the default search engine on Android devices. This isn't just about antitrust laws. It's about the fundamental power dynamics of the internet age. Let's talk motorcycles, specifically Harley-Davidson. The iconic American brand is facing some serious headwinds, and now, activist investor H Partners is calling for the CEO's head. Sales have been slumping, their strategy seems stuck in neutral, and the stock price has plummeted over 30% since the current CEO took the helm. H Partners is tired of watching their investment go up in smoke, and they're not afraid to shake things up in the boardroom. This is a classic case of an iconic brand struggling to adapt to changing times. Now for a little good news, at least for all you carnivores out there. While the rest of the restaurant industry is struggling to survive in this economy, value steakhouses are thriving. We're talking about places like Texas Roadhouse and Longhorn Steakhouse, where you can get a decent cut of meat without breaking the bank. Foot traffic at Texas Roadhouse is up a whopping 7%, and Longhorn's not far behind at 4%. Even in a recession, people aren't willing to give up their steak. Let's talk private equity, specifically KKR, one of the biggest names in the game. They just made a bold move, dropping a cool $508 million to acquire Data Group, a German IT firm. They paid a 33% premium over the company's market value. KKR sees the value in Data Group's focus on cloud computing and cybersecurity, two sectors that are only going to grow in importance. This deal is a sign of private equity's insatiable appetite for tech investments and the increasing importance of Europe's tech scene. Remember those tariffs imposed by the administration? Yeah, those are still causing major headaches for businesses on both sides of the Pacific. American chip equipment manufacturers are on track to lose over $1 billion in revenue this year because of those tariffs. Tesla had to put their Cybertruck production plans on hold, citing supply chain disruptions caused by, you guessed it, tariffs. In Hong Kong, shipments of certain goods have been completely halted due to the ongoing trade war. This highlights the interconnectedness of the global economy, where even seemingly small policy changes can have ripple effects around the world. Time for a quick rundown of some notable earnings reports. United Airlines managed to beat earnings per share estimates, but they also issued a warning that a potential recession could put a serious dent in their 2025 profit projections. ASML, a key player in the semiconductor industry, missed on orders due to those pesky tariffs we talked about earlier, sending their stock price tumbling over 5%. Abbott Laboratories beat profit expectations but fell short on revenue, a mixed bag that left investors scratching their heads. Progressive, the insurance giant, missed earnings estimates by a whopping $2.2 billion, but they still managed to grow their business by 25% year over year. Let's wrap things up with a quick look at some key economic indicators. Retail sales surprised to the upside, coming in at a healthy 1.4% increase. Core retail sales, which exclude volatile categories like cars and gas, also beat expectations. This suggests that the American consumer is still alive and kicking, at least for now. Gold, the classic safe haven asset, just hit a new record high of $3,318 an ounce. Mortgage rates continue their upward climb, reaching 6.81%. Overall, mortgage applications are down 8.5%, indicating that the housing market is cooling down. The chips are down, literally, and the trade war's turning global again. Big tech's under heat, gold's glowing, and AI's coming for your screen. We follow the bag, not just the game. This is Money Talks TV. From chip wars to AI takeovers, the markets are a battlefield. Stay informed, stay ahead of the curve, and never stop following the bag. We'll see you tomorrow for another edition of the Daily 8.